This is Scott Bauer with the CME Group. And after a unbelievably volatile day, volatile weekend in the metal space, especially gold, given everything that's going on in the marketplace right here, we're actually seeing gold trade in a pretty flat range today. 1332, 1342 has been the range. Overnight, we saw it down on the bottom. The global sell-off here, it really seems like gold is taking somewhat of a break after the economic news that came out on Friday. Now, Friday we saw that jobs report number, which was much stronger than expected. The key number there was the wage increase. And when we saw that, we also ticked up with Treasury yields. And we know that, when we see Treasury yields tick up, price of gold typically falls. What has bolstered gold over the last 4 to 6 months or so really has been the dollar decline, and now the dollar decline seems to be in a holding pattern for right now, especially after that news that we saw on Friday. So the next step for gold, well, we've got support down below here around 1325. Really, the trading range is going to be 1325 up to its recent highs of somewhere close to 1360, but should be a very, very moderate range. That being said, though, after the volatile sessions that we have seen, gold does seem to be taking a little bit of a backseat today, little bit of a breather. Now, what's next with Powell in place here? Is the Fed going to get more hawkish? Are we going to see the potential for that fourth interest rate rise? Any hint of that at all really could put pressure on the gold market. In addition, as more economic policy, as more economic numbers come out, if we continue to see that wage number increase also, we may start to see gold really back off. But the key for gold here is going to be what happens to the US dollar. If the US dollar is trading in a flatter range, we're going to see gold trading in a flatter range as well. If we have bottomed out in the dollar here, watch out for gold here, because again, that has really been the impetus for the gold rise, has been the weakening dollar. This is Scott Bauer with the CME Group.